Hello guys, I hope you're doing well. I wanted to make this video to talk a little bit about risk management and how I'm managing my risk when I'm trading crypto, and also give a very simplified version of a strategy that can be back tested without risk first, to make sure that you understand it and all of that sort of stuff. And what I'm using, why I'm using it, all of that fun sort of stuff. And I'm also going to be giving an update on the Bitcoin trade that we've been in for about a week now, and talking about the updates on that. So I really do hope that you enjoy this video. None of it is financial advice. This is all just my opinion. So make sure you always go and do your own due diligence. And if I do give any strategies, make sure you go and test these things without risking any money when you just go back and back test using something like the replay tool on TradingView or a back testing software, and journal all of the results in a spreadsheet or something so you can see whether it works over a long time period instead of, oh, I had a winner, I had a loser, it works, it doesn't work. Okay, so now that we've got that out of the way, let's just get straight into it. So let's first break down the Bitcoin trade. So if you haven't seen my breakdowns where I was calling this on the channel a few days ago, last week, I can't remember at this point, but yeah, so we've been in it for a while. How long have we been in it specifically now? Got in here and now it has been, yeah, so it's only been a couple of days. God, time flies. It feels like it's been way longer than a couple of days. But yeah, so we got in around here as we called. We expected these lows to be taken out, which they were perfectly. We had a lower time frame confirmation here, and then we started showing evidence of coming up, first in the candle structure being broken on the 4-hour with these candle highs, and then we saw some actual market structure being broken around this point. Don't worry so much if you don't understand this for now. Just understand that we were looking for highs to be taken out in whatever form they come in, and as evidence that price is going to continue going. And as those highs are taken out, I then went to break even, and then I was beginning to trail my stop loss behind the major structural points. And so for me, that does obviously require understanding how you define key structural points. So at this point, it was around here. And then right now, it's just a tiny bit above that and below this low here. Why? Because it was from this level that we created this higher high, and it's from this level that we created this higher high. And so I'm expecting it to be within this range. And so even if I come and get stopped out now, I'll still be at a small win because my stop loss is in profit. Okay, but more than likely, I think we will continue seeing prices go higher. We are retracing right now, but that's really nothing to worry about. And we are in the short term. And this, at the moment, we did get up to about 4.5–5% with this particular trade. And we are in about 1.5% locked in potential profit anyway. I did take a tiny amount off the table here, but we did get a very good sign yesterday, as I spoke about in the last video, because this last bearish close right here, the high of that candle, as we wanted to see, we saw a close above that level. This is a very good sign. Even though it was a very small close, it's still a good sign. It would have been better if it was stronger, but nevertheless, you know, beggars can't be choosers, and that's fine for now. And then on the 4-hour, we can see that we look like we're retracing now, but we could still come and take it out down here. That's absolutely fine. It's just about playing the game of probabilities. If I had to guess, I'd say we'd come somewhere in here if we were going to retrace at least down to this point before continuing to go higher. The next level that we could meet some resistance would be around these levels here, and then beyond that up here. I'd be looking to take most of my partials out here and then letting a winner run on. But yeah, so very simple, really. Nothing too complicated. I like to just keep things simple and just monitor the structural levels. I'm not wondering about, oh, is Bitcoin going to reach this crazy target or anything like this. I'm just monitoring the technicals. And the reason for that, by the way, is because as much as the fundamentals are moving the market, you've got to understand that because there's so much liquidity, and as these assets get bigger, especially because Bitcoin is so big, it's much harder for one individual party to manipulate or move the market. And so even if there is a news announcement, it would take quite a few number of people and institutions in order to move the price in a major way. And what this means is it means that price is going to be more predictable on a technical basis. And so that's my logic behind why I'm looking increasingly more at technicals for these larger market cap crypto assets. So hopefully that makes sense. So managing risk, again, I said move to break even and then moving stops up. Now, if you've come from another area of crypto where you're not too familiar with kind of day trading or intra-week trading, you might be going, oh, 4%, 5%, that's rubbish. you've got to understand it's a different game trading. And at least the way I do it, it's very, you're trying to manage risk and just get in, get out, get in, get out, get in, get out, and just secure profits off the table. It's more consistent, but sometimes you'll have these crazy moves that go up 20, 30%. But generally speaking, with this approach, for me at least, because I've been doing this for a long time, it's a more consistent way to just have little drip feeds within into your trading account, or whatever you want to call it. Okay, so now that we've got risk management out of the way, let's break down a quick and easy strategy. So right here, we've got a simplified strategy. So if you've come from my other channel, or you're aware of my other channel, I'm always talking about these three elements of a plan. Number one is directional bias. Number two is area of interest. And number three is entry trigger. So in other words, what direction are you looking for trade opportunities in? What area of interest, or in other words, what levels are you monitoring, and on what time frame to expect price to come into and react off of? And then the entry trigger, what are you using to pull that trigger on a actual trade opportunity? And so this is a simplified version of what I am doing here. There are other elements, but to be honest with you, if you are not a little bit more advanced, they're just going to confuse you, and it's really just unnecessary. It's always better just to understand the basics first. So the first thing when coming down to my direction is I just want to make sure that the fundamentals aren't crazy. There isn't anything massive coming out. There isn't anything too intense that could push prices, a general trajectory of price in a different direction. But because of these larger market caps, these fundamentals are likely to play out over a longer term perspective. And so they don't hold the same weight that they do, for example, with, on the other end of the spectrum with low cap, metaverse coins or something like that. And so I'm particularly looking at Bitcoin, just Bitcoin news in general, adoption news. So in other words, how is it being adopted into the mainstream? For example, with in the last 2 weeks with MasterCard and Visa coming out with different adoption notices and different things they were doing that was positive for the crypto space, or at least appeared that way. That would be an adoption piece of news. And if you go to cointelegraph.com, they will be a great place to get this information. Next thing is daily structure. So specifically a break of structure. If you can read price action, it's going to be a powerful tool. If not, if you struggle, you can use the pivot high-low indicator, which is right here. So I've edited the settings a little bit, but on the daily time frame, you can mess around with how aggressive you want to make this. Obviously, this is pretty aggressive, but you can see it kind of marks out these points for you fairly systematically. And being systematic is a massive plus when it comes to technical analysis. Otherwise, how can you expect systematic, or in other words, consistent results if you're not doing a consistent process? So after we've got that, if we see, let's say, a bullish break of structure on the daily, that is a bullish indication. Does it mean we're going to buy right there? No. It means that that's the first part of a three-step equation. The second part is, okay, when it retraces, because we always want to buy the pullbacks, where may it retrace to? And this comes down to, for me, 4-hour time frame, supply and demand, or retest levels. So if you don't understand supply and demand levels, let me know. I will make a video on that. There's nothing special about them, especially in the TA world, where people will try and convince you that, one level, there's this magic type of level that like always works and stuff like this. It's really not that important. It's just about understanding where the cluster of volume will be, and it will be somewhere from the point, from the high in this case down to the retrace. It will be somewhere within there, no matter how people want to break it down. The top is the retest level. Supply and demand is normally a little bit lower for something like this. And so I really wouldn't get lost here. For me, I mainly do supply and demand, but I also do retest levels more as a point of reference. But don't get lost in the jargon here. The bottom line is any level is fine. If you can spot a level, even if it's just literally a retest level, the high that price broke and it came down there, doesn't matter if it spikes below a little bit, that is absolutely fine. The number 3, entry trigger. Entry trigger is just what is making you pull that trigger. And so for me, liquidity and structure. So liquidity is more of a blanket term to describe taking out of lows before going higher, or taking out highs before going lower. In any decentralized environment, obviously it's a bit if and or. It's not like people are going directly for your stop loss, and people throw around terms like stop hunts. I don't think it's obviously it happens, but it doesn't happen in the sense of, oh, I see that there is this level there, let's take that out. It's more, done on just percentages and where things are likely to be, and done at a macro scale. Like everyone's working with probabilities and stuff like that. So that's my opinion anyway. It's just a blanket term to describe what I just described. And then structure, I then want to see structure breaking in my direction. So this is a classic example here. Let's say this is on the lower timeframes. We've done the previous 2 steps, and now we are looking for that final thing to pull the trigger. We see these lows coming down, lower lows. Ideally, the more wicks here, the better. Then we see structure breaking towards the upside in the form of breaking these highs here, and then creating higher lows and higher highs. And then as an extra confluence to take it that extra mile, going down a time frame again and looking for confirmation of maybe a candle pattern or candle structure. So in other words, the candle highs getting higher, looking for that extra bit of confirmation in one of these pullbacks. It just allows you to get and refine more and more things. But always remember, the more you try and refine and the less experienced you are, even if you're really experienced, the more you try and refine, you leave yourself open to more human error. You also leave yourself open to more risk because you're trying to predict things closer and closer to what will actually happen, and therefore it can be a little bit tricky. So keep that in mind. It's always best to keep it simple at first, and don't worry about here, like for example, I'm looking at all-time highs, I'm looking at volume, I'm looking at a few other things, but to be honest with you, it's not all necessary in the beginning, and you should go away and you should back test these things on TradingView by using the replay tool, and just going back and journaling like 100 trades and seeing how it performs, and just doing it as you would see it in real time without risking any money. So you're actually learning and you're not being emotionally affected by what is going on. These things are really, really critical. Now, I would talk about using a lower time frame because this is a little bit more longer term. It's kind of bridging that gap between investing and trading. And I am playing around with using the lower time frames as well. So kind of more intraday, in other words, day trading opportunities. But I don't feel comfortable making a video on that yet until I really kind of understand things in a little bit more depth. It's not like foreign exchange. It's very similar, but there are differences. And I just want to make sure that I'm providing the most accurate information for this particular asset class and not using my previous experience of the foreign exchange markets to try and pin it on the crypto markets. So I hope you've enjoyed this video. If you have, I'd appreciate it if you left a like. And if you'd like to see more technical videos or fundamental videos, leave that in the comment section below and talk about specifically, if it is technical, what about technicals would you like to see? If it is fundamental, what type of fundamental videos would you like to see? I appreciate it either way. I hope you have an amazing rest of your day, and I will see you in the next video.